you all know, simple rule, simplest daily trade you are looking for is to see a fair value gap and then we take a trade. Is that okay? We are not going to use any filter to filter out the trade. So we are literally waiting for a buy fair value gap. If it's green, we buy. If it's red, we sell. And we are taking our trades from 7 a.m. GMT till 5 p.m. GMT. That is London open till London close. And literally, Frankfurt opens at 7, London opens at 8, and then Frankfurt closes at 4, London closes at 5. So we want to trade from 7 to 5 p.m. Is that okay? So every single day, that's what we'll be doing with a fixed risk to reward and risk management. We'll be going with a 15 pip stop loss. Is that okay? And we'll go for a 1:2.5 take profit. Okay, so yes, let's see how the day goes. Is that okay? So you can see currently we have a fair value gap, but this fair value gap is stemming from the Asian session, so we aren't interested in that. We will be waiting for a fair value gap that starts when the London session opens. Is that okay? That's from 7 a.m. That's when we'll be looking for a fair value gap, and then we'll be taking our buy and our sell trades. So literally that's what we'll be waiting for. Is that okay? At the end of the day, when you see the fair value gap, it's like you just can't unsee it. You see it printed. If it's not there, it wouldn't print. So the indicator we are using is called FVG by nephew Sam, and that shows us all the fair value gaps in the market at every point in time. Is that okay? Yeah, so as it stands, we have a sell fair value gap, so we are going to put a sell limit here, and we'll put automatic 1:2.5, so 15 pip stop loss, 37.5 take profit. Is that okay? So our trade has been activated. At the end of the day, it's just one or two things: either our stop loss get hit or our take profit get hit, and that is the data we are looking to gather to see if we traded this way every single day, will we be profitable or not? Will they favor our account size or not? Okay, so preferably every trade you can take the trade with a 0.5 pips, 0.5%, or you can use 1% of your account size. Is that okay? So this is literally the app you are using, Fair Value Gap by Nephew Sam. Okay, and then we use sessions to show us the London session and the Asian session as well. Okay, and then with the smart money, it shows us the break of structure, change of characters, and equal highs and equal lows. We love to see it on our chart. Okay, so yeah, our trade is still running. It went close to hitting stop loss, but it's right now at break even. So yeah, first trade. So wait until we get a second trade, and we take that trade. Okay, so either risk 0.5 of your prop account or 1% of your prop account per trade. In the long run, the goal is sometimes you might have losing days, but other days you might have winning days, and your winning days can offset your losing days. At the end of the day, it's all about the risk management. If you have good risk management, good risk to reward, it tends to pay out in the long run. So yeah, trading also tends to be a waiting game, because all we are doing is just waiting for an opportunity to take a trade, and we just got one opportunity. And I realized that mostly when you're using the fair value gap, the window of opportunity normally comes between 8:30 a.m. GMT to about 9:30. Within that window, you are able to get a tradable opportunity, and also we between 12:30, 1:30, that's also a second window of opportunity. Is that okay? And the last window of opportunity is between 3:30 thereabouts. So yes, we just got a second trade for a buy. Okay, so literally put it about here. Our first trade just hit stop loss, and then our second trade also just hit stop loss. You can see that there was a wick saw. I think there was news around this time. That was 12:30. Market went down aggressively and up. Okay, so at the end of the day, we've had two tradable opportunities, and both has hit stop loss. Okay, so if you are risking 0.5% of our account size, then today our account size will be down by 1%. 0.5, 0.5. Are you getting it? So that's why risk management is key and important. So we'll see if we'll get another entry for the day. Yeah, so realize that the window of opportunity is when the market is very volatile. We just have another entry for a sell. So we'll just take a sell with our usual 15 pip stop loss and 37 pip take profit. So with these three windows, 8:30 to 9:30 a.m. GMT, that is when London comes on board, so the market gets volatile. And also 12:30, 1:30, it's like a preheat for New York session open. So always you see that the market gets volatile within that period, 12:30, 1:30. Okay, and now again the market gets volatile when New York session opens. So that is 2:30 to 3:30. So you realize that these periods, these peak periods, these volatile periods, that's when we get most of the setups or the most of the fair value gaps being created. So anytime you're trading, you can keep an eye on this time frame, this window, 8:30 to 9:30, 12:30 to 1:30, and 2:30 to 3:30. So literally you can save yourself some hours by not being on the chart all the time, but coming or showing up on this chart around these peak periods. I hope you get it. So yeah, you can see that our third trade almost hit take profit. We just had another entry for a sell. So we literally put our sell with our 15 pip, and that is it. So we always end our trades at 5 p.m. I think it's almost time. But at the end of the day, using the fair value gaps, we had 1, 2, 3, 4 entries, and first two hits stop loss. Third one very close. I think it missed by some 2 pips, and we have a fourth entry activated as well. So pretty much 15 minutes and then all trades cease. Is that okay? So yes, that will be it. That will be it. Session ends at 5, and then we are done for the day. So today we had what? 4 tradable opportunities, 2 hit stop loss, okay, 3 hit stop loss, and then one was close to hitting take profit, but it didn't hit, so we close it out at break even. Okay, so now if you raise 0.5% of your account, then your account will be what? Down by 1.5% today. And if this had hit take profit, which was missed about 2 pips, right, then you realize that the losses that we had would have been taken out. So at the end of the day, it's all about risk management, and yeah, this is the data we are trying to collect. So, and with my back testing and forward testing, I realized that you're able to have about at least 4 to 7 trades in a day. Are you getting 4 to 7 trades in a day? So that's something you should also keep in mind. So yeah, that'll be it. So peace out. Catch you in the next one, and splendid day to you all.